Hey, good morning. Let's go over today's trade plan. In the overnight session, we were using 2110 to 12 half area as key support, and the break below that zone ended up liquidating ES down into the 98 half to 2100 half support zone, where responsive buyers were active yet again. Bigger picture, we are still trading within a balance area, and the markets are very much range bound. Although now the Russell is holding up better, and heading into the open today, we'll be watching to see whether the breakout in Russell from yesterday is actually holding or if it's completely failing. And in the S&P, right off the open, watch if we're holding below 09 quarter. Holding below 09 quarter means that we're holding below the overnight breakdown, and that can result in a retest of the overnight VPOC at 03 half and initial support at 99 half to 2101 half. Now, buyers can still be active at 0350 and 99 half to 01 half, but we are going to have to gauge just how weak the markets are shaping up to be in real time. So if ES goes down to initial support, but it does so on heavy volume, heavy momentum on the downside, and the AD line is quite weak, then we may actually end up breaking the initial support zone and going down testing the 94 to 96 quarter, which is the bull bear zone. And in the event of strong selling, even 90 to 92 can get tested. But the idea is that, with no real major econ reports pending on the day time frame at this point, and the employment report due tomorrow, the markets are more likely to simply continue balancing within a range rather than, break outside of this recent range today. Now, the overnight breakdown was on very heavy volume, so it's something we do have to be on the lookout for to see off the open whether that high volume is sustaining throughout the day session. But the expectation is that that's not going to be the case. And even though we can still go lower from here and tag 94, 96, potentially 90, 92, that this is not going to turn into a all-out balance breakdown. But that's something that we will have to see off the open. If the AD line is at minus 1700 to 2000 and tick is pegged below zero, then we are going to have to focus more on short side and be careful and cautious on long setups. But as long as the advanced decline line is for the most part more balanced, it can be weak, but just not extremely weak, then we can still continue balancing within a range, and the bottom of the recent balance is 94 to 96 quarters, so that's an area that responsive buyers can still defend. On the upside, like I said, 09 quarter is the overnight breakdown spot. Holding below it tells us that the sellers are still dominant, but if this turns into more of a balanced day, then we can quite easily head higher as well, especially if TF is holding above the 56 to 57 area. So on the upside, 11 to 13 is the initial resistance zone. That's still an area where sellers can be active on first test, but again, we are going to have to see how that zone gets approached. If the market is already balanced ahead of that zone and now is breaking out from a sideways range, then we need to be more careful at 11 to 13, and we'll also be again keeping an eye on the advanced decline and the level of momentum we have going into it. If we're going up on very mediocre momentum and the AD is quite weak, then 11 to 13 can still be an area that presents a good short setup, especially if the Russell is holding below the 1261 HVN. Above that, we have the gap fill at 16 and then resistance at 18 to 20, and those can still present short setups as well, unless we're just seeing a lot of heavy upside momentum. But the idea today is that the short setups at those zones can provide decent reactions, and most likely the market will continue balancing within a range. So even if we go higher, we're probably going to rotate back into the 2111 to 13 area and essentially just kind of balance around it. That is a key high volume area within the current balance, and even if we go through it, it doesn't mean that we can't come back down for a retest. So the idea today is that in the event that we head higher, we'll still probably find sellers at resistance, for some rotational movement. And if we go lower, buyers can still be active. But given the overnight long liquidation and the overnight breakdown, the short-term bias heading into the open below 09 quarter is more bearish than bullish. And then as we go down into 99.5 to 01.5, and especially 94 to 96, at that point the risk reward starts favoring the buy side. And unless it's shaping up to be an all-out, trend down day, 94 to 96 is still a good spot to fade the market. 90.92 is still a decent spot. The only issue with 90.92 is that it is directly below the bull bear zone, so we are going to look for a quick reaction if 90.92 even gets tested. So in the event that we go all the way down there, you don't want to see the market simply, kind of providing a small reaction and then holding below 94.96 as the advanced decline line continues to get weaker and the other markets continue to get weaker. That would not be a good sign. But as long as we're getting a quicker reaction off of 90.92, and there's still potential for buyers to step in and push it back up. But ideally, even on the downside, 94 to 96 actually holds, and ES continues bouncing in a range, and that way we'll be set for a directional move heading into tomorrow, and non-farm payroll being a decent catalyst can then drive a directional move one way or the other. So at this point, very balanced market, and that has required a very flexible and nimble mindset and the ability to adjust your bias fairly quickly, because as you can see, for the last several days, the market has simply been bouncing within a range. Sellers being active at the top of the range and buyers active at the bottom of the range. So again, today, unless it's shaping up to be a trend down or a very strong momentum type day, we'll just focus on fading the edges. Except, if we're getting good location, we can still hop on board on the short side, because if TF rejects 1261 on the upside and starts holding below it, and then breaks below 1256, then the downside objective on the Russell would be the 1248 half to 50 half area, and that can take ES down to 94 to 96, or at least initial support. So you are going to have to be flexible with your bias. You are going to have to be pretty dynamic. Keep an eye on the NYC tick. Be very mindful of the momentum situation, and understand that momentum is not something that has to sustain all day. It can go back and forth, so monitor those momentum shifts. Keep an eye on the AD line to just measure the level of broad market weakness or strength, and I think that will help guide the trading decisions today. And then there's no need to be super aggressive if there's a lot of upside momentum off the open, let's say, and it seems like 11 and 13 is not the ideal spot, that we are going to fill the gap. Like AD is closer to 0 than minus 1,000. Then wait, right? Be a little more patient. Since the expectation is for more of a balanced session today, it's okay to skip that trade and take the next one as a fade setup. But the focus will be more on fade setups today. So those are our main ideas heading into the open. Let's see how the market opens up. Let's see what the level of strength and weakness is on the broader market, and we'll take it from there.